Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is November 29th. If you're going to be investing in November, only a couple days left, so make sure you get your money into the market before Friday. Friday is December 1st. Can't believe we're already almost through 2023, but here we are. Today we are going to take a look at one out of the healthcare sector. Let's take a look at Cigna. Let's jump right in. If you want to know more about this company, check them out at www.cigna.com. That's www.cigna.com. That is their homepage where I pulled this information from. As I mentioned, they are a healthcare company. Cigna Healthcare is a health benefits provider that advocates for better health through every stage of life. As the healthcare benefits provider for the Cigna Group, we guide our customers through the healthcare system, empowering them with the information and insight they need to make the best choices for improving their health and vitality. U.S. commercial, U.S. government, and international health are the three segments that they work in. In this U.S. commercial, employee-sponsored health plan, so it would be like your healthcare provided by your employer, or if you are an employer, the healthcare you provide for your employees. U.S. government. So this might be for elderly people in the Medicare, Medicaid space, individual and family health plans as well. So if you work for maybe the federal government, you might be on a government health plan, and international health. So they have their hands worldwide as well. Individual and employer sponsored health plans. So a foreign company could use their health coverage as well. Again, www.cigna.com. That is their homepage where I pull this information from. Now the fun part, the reason we are taking a look at them, well, probably not fun for them, but fun for me, down 8.11%, huge drop on the day. I don't know if you've been around the channel for very long, but I'm going to take a look at a company that drops like this, that pays a dividend, 8, 9, 10% is a huge drop for a year, let alone a day. So there's got to be something going on, and potentially is the company presenting any value. And hey, if you are new to the channel, go ahead and drop down in the comment section. Hit that subscribe button, give me a thumbs up, hit the notification bell so you're notified whenever we post any content. Drop a comment, share with anyone you think that might find value. Help me grow this channel. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, and let's get back to it. So we are talking about the Cigna Group, again, down 8.11% on the day. Ticker CI, out of the healthcare sector, closed out the day at $262.87. 52-week range as low as $240.50, as high as $340.11, and they are creeping back to that 52-week low, definitely closer now than they were yesterday, and closer to their 52-week low than they were their high. Average volume of 1.3 million today was, 1.3 million today was 7.55. So you can see that pretty level here, and then huge drop around noon. And it looks like they tried to rebound a little bit, but then a steady sell-off throughout the rest of the day. Market cap of $76.921 billion, a beta of 0.66. So even though they were very volatile today, they usually are less volatile than the overall market. Price to earnings ratio, PE ratio, sitting at $14.82 per share. EPS very high. It is not very often that you see the earnings per share higher than the price to earnings, higher than the PE, but here we are. EPS sitting at $17.74 per share. Earnings date February 2nd, so look for that coming up here in the first part of next year. Forward dividend is $4.92. They are quarterly payers, so divide by 4, or here in a minute we'll see what they pay per quarter. This is a little lower than I like at 1.72% dividend yield, but let's wait and see if they are growing over time. A lot of times healthcare are growing pretty fast, and maybe their payout ratio, 27.13, very low payout ratio, so they do have a lot of room to increase this dividend. So if it's a fast grower in the healthcare sector, it might be worth looking at. Let's keep going here. Ex-dividend date is coming up December 5th. If you were to buy them on December 4th or before, you would be in line for the next dividend. And according to Yahoo Finance, where I pulled this information from, they have a one-year estimated target of $347.81 per share. So they see it creeping back up to its 52-week high and actually setting a new 52-week high. Now let's get into statistics. I like to look at dividend yield theory to see if there's potential value. To do that, we drop into statistics. We go down to dividends and splits. We look at their 5-year dividend yield average, 0.76, and we compare it to their current 1.72 or forward annual dividend over here, 1.72. And since it is higher, and it is much higher, over twice as high, so it speaks to some undervaluation or some potential undervaluation with this one according to dividend yield theory, and some significant undervaluation at that. We saw the payout ratio again, payout ratio 27.13. Dividend date, their ex-dividend date, December 5th. They are going to pay out on December 21st. So you could have a nice little, Merry Christmas present here right before Christmas if you bought this one, or if you're an owner, you're going to get your dividends right before Christmas. Now, I like to get into financials. Anytime you're looking at individual companies, you want to look at their financials. Make sure you understand how they make their money, how their revenue is growing, what does their balance sheet look like, what does their income statement look like, are they paying down their debt, what do their debt to assets look like, all that good margins, what do their margins look like, their revenue growing over time, all that information you want to understand and define that. You can find that in the financials, a lot of good information there. You also want to look at free cash flow, or I look at free cash flow because we want growing free cash flow because dividends are paid out of free cash flow and we want growing dividends. So let's look at free cash flow here. 2019, 8.4 billion in free cash flow. 2020 was 9.2, so big jump up there. Excuse me. 2021, a drop. It looks like a drop, but we're going to look at repurchase of stocks here in a minute as well. Looks like a drop from 2020 to 2021 to 6 billion, and then a jump back up to 7.3 in 2022. But again, if you look at this repurchase of capital stock here, you see that 2019 was about 1.9 million shares, 2020 only 4 million. But then even though there was a drop in free cash flow, there was a increase in the repurchase of capital stock. So it looks like they took a big chunk of that free cash flow and repurchased more of their shares. Looks like they are continuing that trend in 2022, and to date so far in 2023, same thing. And it looks like they have significant amount of growth in free cash flow to date here so far in 2023. So overall, from 2019 to date, growing free cash flow as well as a significant repurchase of their own stocks. Very nice to see. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. They present the information, the same information in a little bit different manner. They do go back a little bit further, which is why I like them. And they have 13 stock analysts that have looked at this. They call it a consensus buy. They have a low estimate of $253, which would be a 3.75% decrease from where it currently sits. This 8% drop on the day is definitely getting them closer to that 52-week low, or that low estimate here, as well as their 52-week low. They have an average estimate of $332.23. This would be pretty much in line with what we saw with Yahoo Finance on the previous page. That would be a 26.39% increase in the stock price. And a high estimate of $365 would be a 38.85% increase. All the while, you could collect that 1.7% dividend yield. And if you got them to back here at this 250 or lower, you'd have an even higher dividend yield. Might even creep up into the 2% range, which wouldn't be terrible. Now, I like to look at the statistics here and look at return on equity and return on invested capital to see how well a company is doing reinvesting in itself. I like 10% or better. Return on equity for this one is 11.8%, meets the criteria there. The return on invested capital is a little bit lower at 8.64% than the 10% I like, but not egregiously so. I could live with that. I would like to see this higher. I would actually like to see the return on equity higher as well for a company like this, but not terrible numbers overall. Their EPS growth, I like 5% or better. They're estimated to grow at 13.34%, and their revenue is estimated to grow at 9.45%. So pretty good numbers overall. Looking again, I might wait for them to pull back a little bit more, hit towards this low, back towards that 52-week low around the 240s. Anything under 250, I think, might be a good buy for this one. It's not a terrible entry price for a company like this. I'm pretty heavy in the healthcare sector, so I'm not looking to add, but this one looks interesting nonetheless. Now let's look at the dividends. Again, quarterly payer, they pay out currently at $1.23 per share. Low payout ratio, under 30%, 27.67%. So a lot of runway to increase that payout over time, and nice dividend growth on this, just under double digits at 9.82%. Went back to March 2020, they were paying 4 cents. Looks like a big jump up March 2021 to $1. Another jump up in March 2022 to $1.12, and most recently March 2023 they jumped up to $1.23. So nice dividend growth over time. That was a huge jump right there in 2020. They've gotten really aggressive in their increases over the last few years, which accounts for this 9.82% dividend growth. And they pay out in the March, June, September, December timeframe there. So if you're looking for something, a lot of companies pay out in this March, June, September, December timeframe. So if you're looking for something in there in the healthcare sector, Cigna might be worth a look. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing in it. If I am and it meets 5 of the 8 or 6 of the 9, if it's a financial company like a bank, then I add it to my watch list, do more of a deep dive into the financials, do a discounted cash flow analysis, see where I'm willing to buy it, and then it potentially becomes an addition to the portfolio. It's also how I check up on positions already in my portfolio and make sure they are still meeting most of my investing criteria. Well, that is it. Let me know what you think of the Cigna Group. Is it one in your portfolio? Is it one you're watching? Is it one you're interested? Are you concerned with the 8% drop on the day? What is the reason for the drop? Let me know in the comment section below what you think. Always appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. If you're in the background there and you haven't done so and joined the vested interest community, go ahead and hit that subscribe button, hit that thumbs up, drop a comment down below. Let me know what you think of the channel. Let me know what you think of Cigna. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Cigna you'd like me to do a stock pick of the day review on, go ahead and drop it down in the comment section and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.